Hello everyone, welcome to the Financial Information Channel. My name is Marvin. In this video I'm going to mention top 5 stocks that are kinda sweet, and since we're really close to Valentine's, I actually made this video special because some of these stocks actually have a lot of potential, especially during the next few months. Now I have mentioned a lot of these companies before in previous videos. However, there's a company that is completely new, and the reason why these companies look attractive is because some of the companies actually took a huge hit even though the company reported good earnings, but that happened when the stock market actually sold off during the last few days. And we're gonna start with the video, and the first company is gonna be Match. Now Match was one of the companies that I mentioned during the top 5 stocks during September, and at the time of that video the company share price was in the low 20s, and at this moment the company shares is almost at the $40 price. And Match just reported earnings during the first week in February, and they had a really good earning quarter. And as you can see in the screen, the company beat the revenue by 28.5% during the quarter, and that was a really good revenue growth during the quarter. Now they had a lot of key metrics. Their direct revenue was 29% over the previous quarter. Their subscriber growth was 24%. The ARPU, which is the average revenue per user, was 4% positive. And having that increase in ARPU is going to help the company pay off the debt and increase the revenue for the next few quarters. Now I'm going to recap really quick the numbers, and as you can see the screen, the price to earning ratio is about 32, and the market cap at this moment is around 10 billions. And the share price is almost $38. At this moment it's 37 with 99 cents. And as you can see in this screen, the forward price to earning is around 26, which is actually good in my opinion. Now let's take a look at the stock chart so we can get an idea how the company is doing at this moment. And as you can see at this moment, in this stock chart, the RSI is a little bit overbought. Even though that the stock market moved down, the company share price didn't move as much. There is support around the $32 price and another support around the $28 price. And the volume has been mostly positive during the last few weeks. That is impressive in my opinion. Now, like I mentioned in the September video, even though I like this company, I was hoping that the share price moved down under the $25 price. However, the company started to move up, and now we are almost at the $40 price. And based on some key decision by the CEO, I think the company is gonna continue moving up during the next few years. However, at this moment the share price is a little bit too high for me. Now let's go to the next company. Now this company is gonna be in the financial sector, and I mentioned this company as the #1 stock during the top 5 stocks during August, and this is JP Morgan Chase. And the reason why I'm going to mention this company is because the financial companies don't tend to move up as much, so it doesn't have a lot of volatility. And all of the financial companies are going to benefit when we see the Fed continue to raise the interest. And as you can see in this article that was published at the end of January, a lot of analysts expect the Fed to raise the interest during the next few years. And I do expect the Fed to raise the interest, and that's gonna help this company in my opinion. Now let's review really quick how the company is doing at this moment. And as you can see in the screen, the share price is around the $111, and the price to earning ratio is 17.71, and they have a good dividend with around 2%. And since this is a financial company, it has a huge opportunity to increase the dividend in the next few years. And as you can see in the screen, the forward price to earning is around 11.44. And since we have seen during the last few days, the Dow has moved down quite a huge amount, this company is actually not overbought at this moment. Let's take a look at the stock chart. And as you can see in the screen, the JP Morgan stock chart, the RSI, which is the relative strength index, is around the 50. And the relative strength index measures how overbought or oversold the company is at that moment. And as you can see, it has a support around the $106 and another support around the $101. And the positive volume is coming back during the last few days. And as you saw, the company shares actually moved down quite a huge amount during the last few days. But as you see in the screen, from December to January, the company share price moved up really fast. and that is a bad sign for a financial company. And JP Morgan and Chase is gonna be fine for the long term because this has a really good balance sheet and in my opinion is in a good sector. And now let's go to the next company, and that was the number one company that I mentioned during September, and that is IPG Photonics. Now IPG Photonics, just like I mentioned in that video, has a lot of advantages. Now the company shares actually have moved up quite a huge amount during the last 6 months. During the last 3 months, the company has moved up only 4%. However, during the last 6 months, the company share price has moved up over 41%. And the company share price has only moved up only 3% because the share price actually moved down quite a huge amount during December. And I had a few people ask me about IPG Photonics back in December when the company shares were moving down, and I thought the company was gonna be fine for the long term. Now let's take a look really quick at the numbers, and at this moment, as you can see in the screen, the share price is around the $239 per share. The company has a market cap of around 12 billions and the price to earning ratio is around $35. Now this company is going to report earnings on February the 16th, which is gonna be really interesting to see how they do because this is a really good quarter and I expect the company to beat the EPS and revenue. Now we will have to wait and see how the share price reacts to the earnings. And you know, that is always interesting because sometimes the share price doesn't go accordingly to how they report. Now in the forward price to earning, the company has a forward price to earning of around $30. But now let's take a look at the stock chart just to get a quick idea how the company is doing at this moment. Now you can see in the screen the company has a support around the 210. Now you can see during November the company moved up quite fast, and that was one of the reasons why the company sold off during December. And as of right now, that has been the best entry price back in December when the company share price was under around $210. And during January, just like any other stock, the company share price moved up almost to the $265 price. And as you can see in the screen, from January the company moved up around from the $220 all the way to the $265 price. That is an impressive run. However, when the company share price move up at that pace, the pullback is gonna be tremendous. And just like you see, the company is being affected in the stock market and it had a huge pullback during the last few days. The share price is around the $233 and we're expecting the earnings in the next few days. Now the good thing about this company is we're going to find out really soon if the company is gonna move up all the way to the over $250 per share after the report earnings. However, there's potential that the company shares actually move down around the $210 per share. I do think that for the long term, this is a really fantastic company and it has a lot of advantages. Just like I mentioned in that video, if you want to get more into detail about this company, I would suggest you to watch the top 5 stocks during September. Now this is another company that I'm actually really excited because we get an idea how the company is going to react after the stock market is sold off. And that company is going to be Activision Blizzard. This was one of the first companies that I mentioned in the top 5 stocks to watch or buy during May. And I'm going to go straight to the earnings because the company had a fantastic earnings during the last few weeks. And as you can see in the screen, the company beat on the revenue by 90 millions. It was positive 7.8% over the previous year. Now, one of the most exciting numbers they announced is that the net booking for 2017 hit a record high of 7.16 billions. The previous year was 6.6 billions, and the net bookings from digital channels were also a record of 5.43 billions. And one of the most underrated parts is the operating cash flow. It was also a record of 2.2 billions. And the company actually had a really good guidance for 2018. We will see what happens during the next few months. But now let's take a quick look how the company is doing at this moment. And as you can see, the share price is around the $68 price. Now the price to earning is really high at this moment. It's around $189. It has a really strong market cap of around 51 billions. And the company pays a small dividend. Now, I don't expect Activision to increase the dividend because the most important part, in my opinion, is paying the debt that the company has. And for the forward price to earning, that is most important than current price to earning. It has a forward price to earning of around 22. And now let's take a quick look how the company shares are moving up based on the stock charts. Now, you can see at this moment the RSI is starting to turn positive, and the RSI measures how overbought or oversold the company is. There's support around the $66 price and another support around the $61 price. And the positive volume is starting to come back. Even though the company reported great earnings, the company has a habit of always having a huge volatility during those days. Now, Activision Blizzard had one of the best first 6 months in 2017, and during the last 6 months of 2017, the company started to move sideways. And in 2018, I do expect the company to continue moving up, even though the price to earning ratio at this moment is a little bit high. You saw that the forward price to earning is quite a huge improvement. And now for the last company that I'm going to do for this video. This company was brought into my attention by one of the subscribers back in May. This subscriber actually brought this into my attention because I wasn't very familiar with the company, but I started to do more research. And that company is going to be Five Below. Five Below has been doing really well during the last few years. Now, Five Below is a retailer that sells the items at a really reduced price, and it has a lot of attention with young teens, and that is very important in my opinion. Now, Five Below is expanding more in the United States, and that's going to improve the revenue. However, we have to keep an eye on the comp sales and number, because that is going to be very important when a company expands. That is a really key metric. But now let's take a look how the company is doing at this moment. And as you can see in the share price, it's around the $64 price. And the price to earning ratio is around the $42. And the market cap is around 3.5 billion. So this is kind of like a small market cap. So it has a lot of growth potential during the next few years if the company continues to execute like it has done during the last few years. Now, Five Below will report earnings during the week of March 20th. We will see how the company does. That is very important quarter because it's going to contain some of the December sales. Now, in terms of the forward price to earning, it has a forward price to earning of around 27, which is actually really decent in my opinion. Now, let's take a look at the income statement. And as you can see in the screen, the company has a quarterly revenue growth of around 28% and the quarterly earning growth of around 81%. Like I mentioned before, this company is opening new stores, so we have to keep an eye on the comp sales numbers during those earnings. And I believe in the last quarter, the company had an impressive comp sales of around 8.5%. But now let's take a look at the balance sheet. And as you can see in the screen, the company doesn't have any debt. And that is very important for a retailer because if things don't go according to the plan, they don't have to pay any debt, that is very important. Now let's take a look how the company's stock chart is at this moment. And as you can see, the RSI is starting to turn positive. The RSI is almost at the 50. Now the company has a support around the $58 price and another support around the $55 price and another support around the $50 price. During the last few weeks, the volume has been mixed. It has been mostly negative. And one thing to keep an eye, if the company moves up around the $68 price, it has a good opportunity to create more support around that area. Now, this is a retailer stock, and that actually brings a little bit of risk because you have Amazon in that space. But this company has a unique demographic and it sells items at a really low cost. We will see what happens with this company during the next few quarters. And that is going to be everything for the video. Please leave in the comment section below if you found any of these companies interesting to invest in the long term or in the short term in the stock market. And as always, you can subscribe to the Financial Information channel. I'm going to continue making videos about the stock market, personal finance, and how to make money online. I want to thank you once again for watching the video. Have an excellent day and take care, my friends.